All right, live and live and live. I think we're live. Bum, bum, bum. Excellent connection. And what's up, Jacob? Long time no see, my friend. How's life back in this country? I need to get some. I have not caught up in my questions and comments. So until chat starts going, I'll go through some of these. Let's see. Check out creator demographics. No, I think we already know. We like. I think demographics are young men, 90%. She's didn't get the stupid notification. I don't even know how that works. F DraftKings just watching the stream now. DraftKings, I wonder how they did. I didn't even. I got out of them completely. DraftKings, $43. Yeah. Oops. They've taken a beating. Down, down, down. Oh yeah, it looks like we we took our awesome opportunity to get out of DraftKings, got rid of our leaps and everything else. So that's awesome. That's good. Good for us. Sad for anybody else who's holding it. Yeah, long time no see. I'm sure the port is doing well. Sure they are. Yeah, busy, busy. It's crazy. Like we can't do so much stuff, but I don't know. I feel busy, busy. I went ahead and took off like the next few Fridays from my normal job just to make sure I can get caught up. And there's some accounting stuff that I need to do, so I want to get. I don't know. I need to like hire somebody to sit next to me and go through all of it just to like. It's not like I can't do it, but I'm super not motivated to, and I hate monotonous paperwork stuff and ugh. I hate paperwork stuff. I just want somebody to take care of it all. Or maybe my CPA. I know she's probably super expensive for a bookkeeper, but I think that's what I need. Hey Sam, I'm doing well. How are you guys doing? How are you? Yeah, it's just like for me, it's been this crazy month, crazy like last week with Tesla going. Like most of that stuff has just been completely mind blowing, unbelievable. Like seeing it spike up and then expecting possibly some pullback, and the pullback never happened. Just more consolidation and up, up, up. Even though it's where I believe that it should be, it's almost like feeling like I believe that I'm gonna win this lotto ticket, and then it actually happening. So I don't know. It's just been insane. Doing awesome with Tesla. What's up, Mark G? Yeah, like you just can't go wrong with it unless you sell covered calls or something, or call credits. But it's like I guess you could have this last week, but man, that's so scary. Been doing spreads for a year now, getting stressful while being so busy, up 40% year to date. I'm switching to selling calls and some puts here and there. Wanted your thoughts. Um, what spreads have you been doing? Put credit spreads. And what are we selling calls on? Um, I mean, selling. selling out of the money puts and calls. That's basically, you're the casino. So super good. Talk to me about what you're doing though. And like, what kind of spreads were you doing? Let me go around all this because there was actually some good questions, I thought. Um, if you're planning on profiting from increasing Vega on out of the money Palantir calls, what happens if the stock falls unless you're fine with the max loss? I'm assuming you're bullish on the stock or think it will increase. That increasing Vega will outpace any losses if the stock falls. Personally, I would try a neutral wide calendar and give myself range to be right while making the volatility play. That might end up better, but I am bullish and I am fine with the max loss. I used about $600, that was my plans, and even Friday, we're down a little bit on them, but you can see like we were down 16% or I don't know 16%, something like that, 10 12, and we still just, I mean, they pretty much held their value even though the stock was dropping, and I do expect good things out of Palantir. So Palantir Palantir is one of those things where I think it's almost just kind of like what Tesla just did. Like I think there was some realization of where it's going, so the price just started matching what they should be doing. I think Palantir is going to be that too, especially since they do not market at all to retail investors or investors period. They market to potential customers. So I think there's going to be a period where it does rocket up. If it's after earnings at some point, great. And then just kind of looking at the chart, looks like it's at a little bit of low point, like it's been kind of riding in a channel. So I do think that'll be bullish after that. I haven't listened to many of their earnings calls. I'll listen to this one and see what I think there. But I am okay with losing all that premium and want some pretty good upside. So hopefully you either watch this instead of me having to type out so much. I'm the one that asked you about put credit spread, that while Tesla is up, my put credit spreads are down. Since I'm doing a put credit spread and I'm far away from my strike, I don't need to worry about anything, right? Just let it settle down, and by expiration, I'm going to get my full premium. Yes, correct. That is correct. 100% correct. Yeah, it's like one of those things where you don't realize how much volatility. It's like you can be right, directionally correct, and volatility goes up, and you are down on a play. Rockets, love rockets. All right, so been doing some put credit spreads, some call credit spreads, 50% cash, 25% digital expiration type spreads, 25. Holy smokes! So you've been just doing a ton of different things, which is pretty good for diversity. How have your call credit spreads been working out? I market overall just is going up, and I'm liking them less and less. I mean, it sounds like super solid, 25% weekly SPY condors. And how have your SPYs been doing? Like, just talking to a few people, they've got their face ripped off with SPY, expecting a little downtrend, not having enough room on the call side, on the top side of them. So that's been kind of a bummer, and people that have been just like rolling and rolling and rolling for quite a while. Yeah, I guess we could even see exactly what they are. What's up, Jason? What's your thoughts on Tesla put credit spreads? 1135, 1130, 1119. I think it's probably, that's a couple weeks out. I mean, it's probably going to end up solid, but if that's like your only play. I've been playing a little bit closer to the money, but I have a lot down much lower than that. I'm glad to see the consolidation and everything, but I'm not 100% convinced that we're going to stay at this level like long term. I don't know, this last like week with the SPY and everything like ripping up, I feel like we could see some downside. So So let's see. Sorry, I got distracted. So yeah. Anyways, I wouldn't like bet all my money on that. It's probably a really good risk to reward. Yeah, I did want it to be like this. I was just going through some of these comments while we were getting that stuff rolling, but because there's some questions that I get, and that's why I like when people show up on the live stream, just because it's a lot easier to kind of talk back and forth about it, or for me to talk than rather than typing. A lot of times I'm just on my phone, and the response needs more than like a yes or no, and I want to explain my thoughts behind it. Most and a lot of questions, it's just not a black or white issue, right? Like it's like, should I make this play or this play? Well, there's always advantages and disadvantages to doing anything that you're doing option wise. Just about still bullish on Tesla. Oh my God, more bullish than ever. I'm super bullish on it. Like I can buy at the tippy top, and I've bought another 12 shares this like last week or two. Um, like 2025, I think like the base case is about $3,000 a share. So yeah, I'm super, super bullish on it. I think it's still a good deal at these levels. And the people who don't think so just view it as a car manufacturer, and that's it. It's definitely 100% more than a like a Toyota or a GM or anything like that. So yeah, absolutely. That's why I think it can potentially hold up pretty well. What do you think about Dropbox? They beat earnings but fell in price. What do you think would be a good strike for a put credit spread? I got rid of my Dropbox. Which where's Dropbox? Is it Dropbox? There it is. Holy smokes. Oh my God, they got creamed. I need to get rid of let's remove the pivot points. Clean it up. Um Good Lord. I don't know. Um it doesn't look like they've necessarily found a solid bottom. There could definitely be just, and this is just looking at the chart for a moment. What did they earnings? So why did they drop then? I guess is my so I guess that would be my first question, and I don't know because I didn't listen to the earnings call or pay attention to it. Was there just their guidance pretty poor, or is it potentially competition or something like that? But that that just looking at this doesn't show me that it's necessarily the bottom. I mean, they just had like a little dead cat bounce kind of midday. That very well could continue next week. So I would wait till I saw some confirmation of support before I entered a put credit spread on them. And if I was to do one, I don't know. What do we? I don't know. I don't see. Well, I guess yeah, we did have support around this level a long time ago. So maybe a 27, 26 if you really wanted to enter one, but I would wait till after Monday. See what the ticker tells you. Why did they drop though? Do you know? And that's one of those things, like, you should know if you want to play this. If you want to play it, you should be able to explain, hey, they dropped because XYZ. Well, actually, let's see. Is there news on it? 9%. Let's see. Trading lower. Despite sells. Revenues rise. So, like, everything looks super bullish. Um, I don't know. Just have to read into it a little bit more to know that. And then, like, once you know that, if you can figure out that that drop was unwarranted, by deciphering the news a little bit, then that's a good time to enter it and just give it a little bit of time to bounce back. And then you could do pretty close to the money. Let's see. Any thoughts on Nvidia? It's been wild. I like them. but nothing as far as like price action or the company or anything. I think that's all related to the metaverse, I think, from what I know. Super solid long-term holding though. I mean, it's a chip maker and they're tied into kind of like the latest stuff. So definitely a good long-term holding. I probably have some of it in my long-term. I'm not 100% sure. Lost 60% return on investment on call credit spreads this week. Yeah. First loss, rolled to Friday for a debit and condored to pay for it. Need the market red this week, which is too stressful being directional. Yeah, that's where so many people are with the I yeah, I was talking to Logan, I guess like earlier this week, and he was like kind of in the same position where it's just all the top side people, and it's like, yeah, it's got to pull back, it's got to pull back. Well, it doesn't have to, like, which yeah, that's why call credit spreads just they're terrible because like with the put credit spreads, I mean they're not terrible. Like, plenty of people make tons of money on them, but I don't know if we like with our general level of experience is good enough to read things well enough. I find a lot of people make plays based on general consensuses in a lot of discords. Some people are really good at reading them, and I think some people aren't as good as they think they are. But with those call credit spreads, we can never visit those levels again. It's always a potential. What's up, Ghostbusters? Yeah, it has been forever. Yeah, like Jacob, it's been forever. It's been forever. It's been a long time. How do I choose my strikes on Tesla to where you're not aggressive and are comfortable with the trade? So, um, it just has to do with like price action, news. It's just so many factors. I wish there was like a delta or something, um, something like that we could read into, and or like I could put together like here's step one, two, three about what I do. But it's just like right now, because it's had such a rocket up, it's a little bit less comfortable than when we were trading in that mid 600s to 800s. It seemed like it was staying in that range for quite a while. But I do think part of um, this whole jump up has really been a correction, I think, in the price. Like there's things that I've realized for the last year that people are just kind of bringing to the table as far as news and analysts and stuff, just because I pay so much attention to it, like more than most people have time for. But it's one of my passions. It's something I'm super interested in, and so even if it does take a dip down, I think long term, I know long term in my view where it's going to be. So right now, I mean, I think 1,000 is pretty tight. But you can still get so much premium right now down like below 900. It's insane. Like you can get just crazy premiums down there right now to be safe. And I also like part of what I have is diversity of strike prices and expiration time. So I'm able to get out of anything. And what I've been trying to do, which is crazy, I've been trying to find one that goes in the money. So I keep getting a little bit more aggressive with them, not a whole lot, just so I can show what I do when we go in the money with one of the put credit spreads. But I have like 860s I was trying that with. So I think we have up some, what do we have? I have some pretty aggressive ones, but I wouldn't put like most of my money in there at all. Let's see, 1050s, 1150s. I only have five of those. No, yeah, I only have five of those, and then the rest are at 1100. But I just want to make sure, like when I see it after doing this for a while, I just want to make sure I'm getting a good risk to reward ratio. So I don't want to take something at $1,100 to make to make $5 or something on my $1,000 collateral. So as long as I'm getting 10%, I'm pretty happy with it. What's up, Relax Camp? Hi. Just curious if you are bullish on stock. Can you do a put credit spread above the strike? Is there a better way to go about that? Yes, absolutely you can, and I have. So yeah, 100% you can. I have. And you could do either that, you could do a debit spread, either which one. And the put credit spread and debit spread, they give you the same. They give you the same like limited return pretty much. And I've done both. If you really want to get down to it though, you would need to basically like just run both scenarios, see what you can get credit wise, or see how much the credit spread versus the debit spread is really going to net out. But they really should be the same thing, because basically you're on both occasions you're looking for it to be above that whatever the farther away strike is going to be to get max profit on both those situations. So they're not going to change that much. But yeah, absolutely, 100%. I have. Let's see. Could I find? I know I have some of them that I did that were like out of the money. Let's see here. Okay. Yeah. So like this one right here, this is probably one I did out of the money at 800, 790, and I was able to get 655 credit. So you're just going to get a huge credit. So you can open up some put credit spreads way out of the money, $1,000 collateral, and get like $950 worth of premium. So basically it's only costing your account 50 or $100 to open. But yeah, absolutely. Elon just tweeted he would sell 10% of his shares. Like he is going to. Do I have Twitter up? I'm sure that's like. Why don't I have any? Okay. Elon. Oh, he says, I propose selling 10% of my Tesla stock. That's huge. That's a pretty huge tweet if he does. I don't know. I mean, we could actually see if you look at we could see how much that's going to move it. Yeah, it definitely affected short term, but long term really won't matter too much. I'm sure if that goes through, I don't know, even the sentiment or him saying that is probably going to tank it a little bit. I wonder if he's going to get in trouble with the SEC for that. And I'm also wondering, I don't know all the tax implications or anything else behind it. It'd be kind of cool if you could find out when he was selling it and put in a buy order right at that time and actually like buy one of the shares that he just had. It's been tough. What do you think about selling cover calls on Neo, Palantir, Apple, and ARK? ARK I think hasn't really moved too much. I don't know what you get premium wise on it. Covered calls on Palantir, so Palantir's earnings are coming up. So I do sell them on my leaps and on my shares, but I'm letting them all. I just let 12 of them or something expire, 12 or 13 of them expire yesterday, and I'm not putting any more on until after earnings to see what that does on it. Apple, yeah, that's super solid. Neo, do what you want on Neo. That's like the only puts I own are on Neo, by the way. But yeah, I think selling covered calls are great unless it's something you're very bullish on. And that's what I don't like about that's what I like the double-edged sword. I was talking to my friend this morning who's kind of in the same boat, like um sell the covered calls but skip earnings, because what you don't want to happen is you sell them $2 out of the money, the thing rockets up, you get them called away from you, and if you just would have held them, it would have been worth $5 more a share or something like that. So super hard. How to grow my small portfolio faster? Add money. I don't. What are you doing right now, Sanjeeb? Like, if you're doing it, if you're doing it for the long term, the first thing is to step back and realize that you have a lot of time. Get out like a compounding interest calculator, and even if it's a small account, $500,000, understand what gaining 2% a month or 5% a month does for you long term, because you're gonna turn you're gonna turn a small amount of money into a large amount of money. It's just gonna take time. Anything that's gonna have your account grow faster is gonna come with an equal amount of risk. So it, since you do have that time, it's just not worth taking on the risk. Like, you don't want to grow, and then one day it gets cut down by 75%. Um, so there's no secret sauce to like growing it up super fast, but everything does kind of snowball and compound over the long term. So just understand that. I mean, I had a long time, we had a long time trading sideways, not doing much. And then because I was doing it on a stock that happens to go up and I own equity, that's helped me a lot. I am starting Monday. Monday, we'll have the couple accounts. We'll have a new $600 account where I'm going to sell, just put credit spreads on Tesla in that. That's going to be a super, super slow growing account, but you can see what I would do with a $600 account. And then we're doing my IRA account as well. I put 2,000 in there. I'll put another 4,000 in probably in the next week or two. I just am cash poor since all my money gets invested, or there's no use for cash really, or holding a bunch of it. So I just need to make sure I have enough covering everything that's coming out, and then we'll stick the other 4,000. So kind of no matter where you're at, if you're at 600, 1,000, 1,200, whatever, you can see what I would do on those. And I'll just kind of post them as I do them. They're super, super easy. I mean, and the only way you're really going to go fast is taking on a whole bunch of risks. So you buy out of the money calls or something like that, but you're just as likely to lose it all as you are to grow it super fast. So I don't like any of the Wall Street bets. That type of mentality is just silly. It's fun to see the cool paydays, but if anything that or I know, everybody else kind of realizes. So there's not too much surprise out there that we can take advantage of. Oh, you're welcome, Ghostbusters. Thanks. I had a few $5 strike price put credit spreads at the money, so pretty much risking 250 to make 250 on Facebook. Yeah, I've done that too, and I'll do it. So I've done it where, since of course most of mine are on Tesla, but I'll do that when I see a big drop for no reason, and it's been sitting in a channel, and I'll just do it for like a month out, 6 weeks out, and I'll do it right at the money or above the money, just because I know that's super temporary, and I don't want to do it just for the end of the week, because I don't know, even though we know it's going to happen a lot of times, we just don't know when or how fast it's going to happen. Put credit spreads on SPY. Yeah, the only thing that sucks about SPY on the put credit spreads, one, I don't know how much you're doing them on. The premium isn't always super awesome, and it can move a lot. And I guess also depends on the how far out you're doing them too. Just asked about this in the Discord, but earnings expectations for Palantir, they've had a history of beating. So I expect good growth. But I don't have a dollar amount, and I don't follow their financials so much. I think it's, for me, it's overall just what they do and how big that's going to become. Their earnings and their revenue in the short term are not really consequential for me. I think it's more about guidance and what's said rather than the earnings for me. It's kind of like Tesla, same thing. It doesn't matter if they earned $1, $2, $0. They're growing so fast. They're to me, they're just like this spring that is being loaded, and at some point it's going to be released, all that tension, and boom, it's going to be huge. Also, do you do weekly options? And with credit spreads, can you always roll the spreads out a week instead of realizing the loss? So mostly I do not open them up the week of. I'll keep them out. I'll keep them out at least a couple weeks, and I'll roll them out there. The problem is if you do weeklies and they move against you, you can be in a position where there's not enough extrinsic value to roll out, where you might as well just close them. So at least having 2-3 weeks of extrinsic value really allows you that option to be able to do it. But if they really move against you, which somewhat depends on, I guess it really doesn't depend on the other underlying, any underlying, they could have terrible news and the stock price can just fall like that. And if you're opening them up on a Monday, that Friday, maybe it doesn't happen on that Monday, but maybe on Wednesday. So you only have 2 more days till expiration. If that thing just dips down for whatever reason, you really have no recourse. There's absolutely nothing you can do at that point. You could roll it out, but the amount of value left in it could be, $3 or something like that. So not worth it for me. Ideally it's 21 days till expiration where you start rolling them out. I'm a little bit more aggressive than that. I'll wait a couple weeks, and the ones I had expiring next Friday, or I guess this coming Friday now, I meant to get these rolled out yesterday, but I came home. I wanted to do let's see, there we go. I wanted to get them rolled out, get home and do it live, but I just didn't have enough time to do it. So Monday I'll get all these guys rolled out. But most of them, even at this point, was still a week to go. They're still 60, 80, 80% gainers. And I have my couple $1,600 calls I sold on Tesla, which I'll say it again, if these happen to call my shares away, I'll quit my job. So I don't know. I guess both ways are pretty awesome. I kind of don't want to quit because I like the owner that I work for. And that also means if it happened to hit $1,600, every single one of my plays are super in the money. And I have $850 leaps for June 2023. That would be absolutely insane. Those things would be just nutty. But I don't think that's happening, or else I wouldn't have sold it, because I don't want to lose my Tesla shares. I need to, and I'm kind of looking at that Elon tweet thing and thinking about it. I do need to think about it, what the implications of that would be. I don't even know how many shares he actually owns. Not that I should know that. And with credit spreads, credit spreads, you can always roll out a week instead of realizing the loss. But that's the other thing too, is you can roll them out, and generally for a profit, so you can actually collect some more premium generally, but they need to be out of the money still. So you need to take that action prior to getting right up to expiration. And you might not be able to do that. Actually, I don't know if you guys use option strat, but I love it. Let's see. Let's do a bullish put spread. And hey, it's on Tesla. So let's say we do one week out, and let's see where, doesn't really matter. We do like a 5 wide guy, and we can do contract value. So this just kind of shows how quickly this stuff can dip. So this is having one at the money. This is just let me make sure you guys can see that too. This would be having one at the money. You collect your premium here, $178, and you're fine. You're collecting, you're letting it decay a little bit. And then all of a sudden, if you have a $100 dip, which it could be something like Elon selling 10% of his shares, that could give us a $100 dip, and you're cruising right along. That's, you only have $72 left to collect or whatever, maybe $16, and then all of a sudden you drop $100 and it is worthless. Like, even a couple days before, it's only worth like $450 or $480, so you only have $18 or $47 left to work with. And where you would have to roll that out to price wise, you'd probably have to roll it up and out even to think about getting a credit. It would have to be so far. But with a longer dated one, if we're still at that same kind of area, if that happens along the way, you're down and you get a $100 drop, then you're only down, $50 or $100. There's still at that same 1125 area. Okay, you still have $170 or something to work with, which would allow you to roll that out and possibly even get a credit. So that's why I don't like weeklies. And believe me, I've learned the hard way. Probably 90% of the time it wouldn't be a loser and you'd be just fine. But that 10%, if you get your butt kicked, you get your butt kicked, right? You go from 500 to 0 right away, depending on how many you have, or 10,000 down to 0 right away with this whole Elon tweet. That's, it could be a very interesting Monday. So Monday, thankfully I have a little bit of time on things, but Monday very well, we could see down 10, 20,000, 30,000, 40,000 or something like that. But since we have some dates, we're a little bit out of the money. It shouldn't be too terrible. It's also realizing that even though he's selling some of his shares, that doesn't affect the core business at all. They're still going to be massively profitable. And at that point, if it does have a good drop, that's open season on some good leaps then. And I hope so. I mean, obviously volatility is going to spike. We need to wait for it to drop, volatility calm down a little bit. And then it's just, man, get some more leaps in the accounts. I'm starting a new Robinhood account strictly for credit spreads. Awesome. Nothing better, nothing easier. Thoughts on overall market? I feel like so many stocks are at all-time high. Yeah, it feels like it needs to breathe a little bit, doesn't it? It's definitely kind of in the uncomfortably high areas. However, because everything's so inflated, I don't know if you guys have been to the store lately, but for the longest time, I really didn't pay too much attention to it. But now I'm starting to realize little stuff I'm buying, I'm like, man, this is I feel like double or triple what I used to pay for it. So that's overall inflation. So everything is more expensive. And so the stock should be more expensive. They're going to have more revenue and profit just based on the fact that they're selling more. Not that it's even necessarily more profitable now than it was a year ago, but just the cost of everything brings all that up. It's my job, I'm commission based. And so especially with supply chain issues, all our supplies go up. So now we charge our customers more. I make a percentage based on the overall job cost. So that's in turn bumped up my pay, but now my dollar doesn't go as far. So like maybe my pay went up 20%, but I'm probably just spending 20 more percent at the store. So we're just like, it's a whole cycle. So if your money's in cash, and that's why I always say cash is trash, your money didn't grow in value. If it was in, if it was in the SPY or in Tesla or some other decent company, at least you get to ride inflation with everything else. It's this inflation's been nuts. I can't believe I'm pretty shocked over some of the things. I'm like, man, I was thinking about it. Like I usually buy drip coffee from Starbucks, either that, like I make it at home or buy it. And my girlfriend this morning, she's like, here's $5 for your coffee. She does that every like once in a while. And I'm like, $5? I just drink drip. And then she's like, well, how much is it? And I was like, yeah, it's like 3 something. Plus you give them a tip. I'm like, dang, $5 for a cup of drip coffee. Or meat prices are insane. So that's kind of the counterbalance to all the all-time highs, I think, is just the fact everything is more expensive. I mean, like cars, man, cars go up, foods, like everything is just going up. So everybody in between is making more money. I saw some local news articles about people complaining like they can't get any workers, but I think the rates they're offering it's just like so low. Like they're like, I don't understand why anybody wouldn't want to work here. We're paying $16 an hour, and like where I'm at in Seattle, that's nothing. Like $16 an hour, I don't even think you're surviving even on the outskirts. What are my top stocks to sell? Put some calls on. Oh yeah, yeah, the great visual too. This is super nice. If you don't use it, use it. They also have nice graphs, and they have this. Let's see, get this in the shot. But they have a nice slider here too, to where you can see how things change, which is nice. Not so much on put credit spreads because they're super. I mean, they should be intuitive at some point, but like call spreads, the fact that they have like a slider, the graphic representation, I love it. That's super cool to me. So you can see where things go, and then you can also see how things change with volatility, so you can kind of play around with it. And then once you wrap your mind around it, then you don't need that anymore. But top stocks to sell, put some calls on. Well, I'm doing it on Tilray. Like that's all I've been doing it. The ones I like selling calls on are the ones that I don't care if I'm losing. Like if I lose them, so that's the only ones I'm selling my calls on. So like Gap and Robinhood. And yeah, you haven't showed up for a little while, but basically I pared down my whole account. I'm like, I'm getting rid of everything that's not Tesla, Palantir, and then a couple long-term holdings, and that's it. And I'll just play these put credit spreads, just keep it simple. So those ones I like selling calls on because I don't care if I lose them. And then stocks I want to own more of, I'll sell more puts on. So like Tilray to lower the cost basis, and Palantir I could sell some puts on because I don't mind if I gain another couple hundred shares, but it's not just for the sole purpose of trying to make money on it. Companies actually have tons of money to invest in the stock market at the moment. Yes, they do. Use PE ratio at all? Looks promising for Tesla. I see it. Do I use it? Not for like what I want to. I don't look for companies' PE ratio to buy something, but I do pay attention to Tesla's for sure, like 100%. And that's like one of the things that's helped me continue to be confident in it, because uh, whatever it was, like last time it was at 900, the PE ratio was over 1,000, and now like with a forward PE ratio, it's like only 100 and something. I think even the trailing 12 months is at 400 something, so half the amount it was in last time it spiked up. But I mean, it's an insanely fast growing company, so it doesn't really mean much to me where they're at. I just want to see that they're continuing to use their money to grow as fast as they can, and that's what they're doing. The only thing that's slowing them down is supply chain. I bet they're pumping out batteries in cars and factories just as fast as they possibly can. So it doesn't really matter. It's interesting. I think it's been really interesting to see how fast they backed into a good PE ratio, or what I consider good, uh, in the short term. So, but the forward PE is looking absolutely amazing, and next year's PE ratio is going to be even better, because then they'll have the battery manufacturing online, which is going to raise their margins. So that's just going to get better and better. I was just looking at the Dropbox catalyst from earlier. There's really no bad news other than the fact they're going to enter metaverse. I don't know. That would scare some investors off, maybe. I don't know. I don't know why people got into it in the first place. I don't know why I got into it in the first place. I think it's because it's something that I use, and I don't know what they offer more than that large storage and file transfer. So like when I need to send something to my VA that I can't just email, I use them. I actually don't know what else they do. I'm sure they do a lot more than that. Yeah, so that's weird. I would check Twitter though. Like, I don't know if you guys use that. I do. When there's a big move and I can't find news on it, you just type in the $ and the ticker, and then you can go find some stuff. Nice haircut. Thank you. Tao just did it. Actually, that's where I just came from right before I started the stream. Got one of those in finally. Do you prefer stocks over leaps for Tesla? Are you using margin at the moment? I'm using margin for the collateral portion of my spreads. Do I prefer stock over leaps? I think the mixture, because that's a hard question. That's I like them both. Stock, like, to me, is solid. I can own the stock and not care if the stock price drops to half, because I want to hold, like, catch me in 2030 selling it. That's, probably when I'll start selling some shares. But nothing short term, so it just doesn't matter at all to me. So that's the positive, but like the amount of money you have out for leaps is so little compared to the growth. My 850 leaps I bought for 15,000 when it was, Tesla it was back maybe only 2 months ago or something like that, and they're worth, I think it was like 55,000 or something. It's something stupid. Everything has just been mind-blowingly stupid this last couple weeks, so maybe that Elon tweet, or if he does sell off some of it, it'd be helpful. So I paid, for my 850 leaps, I paid $15,582. And they're worth $53,507. So I've gained 37,000, which is a 243% gain. Like, you can't do that with shares. And obviously I couldn't have bought, $15,000 would have bought me max. Just not very many shares, right? Like 20 or something like that if I bought them super cheap. But I like them both. But like right now, where it's been skyrocketing, I'm sure the premium is super high too, which is why that thing's worth a ton. Let's see. Besides Palantir, are you looking forward to any other earnings plays? No, I'm not. And that's kind of part of just trying to make things a little bit more simple for myself. I don't, and just one of the things that I realized, like, by trying to play all these different things, that I really need to pay attention to so many underlying, so many stock and what's going on with them. And some of the companies that I own, like I didn't even know, like Dropbox, I owned leaps on them and I sold against them, which is great. But I don't know enough about them and I don't care enough about them to buy them. Even my Apple, probably a pretty solid holding, but I don't love Apple or want to hold it forever. Like it's just not something I'm passionate about. So, I mean, yeah, all my other stock can go away as long as I have my Palantir and Tesla and I'm happy, and I have a couple others. Just, stuff I want to have. I mean, I still love and it's not because I love the company, but like Tapestry. I love having Tapestry. Just, it's cool to see that I own Tapestry when somebody has a Coach bag and they're trying to flex like they have money, knowing a little bit of that money goes into my pocket, either by the stock price or dividend. It's just like, to me, that's kind of cool. Coca-Cola, I've had it for just a while, and that's just almost like a bank account or a savings account to me. I know it's not going to go crazy or anything. A lot of these I did buy during when we had the big dip, the big virus dip. So I'll hold on to some of those that I actually like, but the rest of them, Robinhood, I've been selling calls against, and I hope it gets called away from me. It's fine. MGM, kind of same thing. And I hope, and I keep an eye on the IPOs too. And if there's something else that's super interesting or I really like, I'll let you guys know, and I'll probably buy some. So can you buy more put credit spreads than debit spread? I buy debit spread at the moment. No, it should be about the same, because if you figure it out, right, if you sell a put credit spread, then let's say it's $500 minus the cash received. Let's say it's $100. Then that means you have $400 sitting there that they're holding for you, just in case thing goes wrong. And that same credit spread, no, the same debit spread should cost you $400. So like you can't do anything more with account sizing just based on either buying credit or credit spreads or debit spreads. If it's the same, pretty much the same play though. And spreads, I mean, debit spreads, they make sense. Speaking of cash losing value, going to college soon and want some advice. If you can, currently have an $18,000 Robinhood portfolio, $9,000 checking account. How heavy would you go into index funds or stock to sell? Calls on my situation. Anything helps? You're welcome. Do you have, I don't know what you're doing. Like, you got income coming in? Is this just like savings? Is this paying for college? The one good thing is all that money is like pretty accessible too. I don't think the indexes are going anywhere. I guess it really depends like the other parts of your situation. $9,000, but it's so funny. Like, $9,000 is like the most I'll ever have in my checking account. Like that stuff is just gonna go somewhere. I'm like, why do I want this extra $1,000 in there? That's 2 more put credit spreads, and I can, like, even being super 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 safe, at least I can earn $50 off of that, like really easily. So hard for me to do. I agree, simplicity is better. I feel like I've seen so many successful traders, investors who only look at like 1 to 3 stocks. Yeah, like if you even think about analysts, I don't know how, like they're not assigned to 30 stocks. They're assigned to 1, 2, 3, something like that, because they need to know them. They need to know them like the back of their hand. And even like when you talk about success, anybody who does really well really is most of the time they're all in on something, like whether it's quitting their job and quitting their job and starting a new business, right? They're essentially and they stick their life savings in it. That's like all the eggs in one basket and everything in there. They're putting all their focus, all their energy on it, like 100%. Like, and those guys, sometimes they fail, but they'll also at the other end of the spectrum end up super successful. We could stick our money into S&P 500 and wait 50 years for it to grow into something decent, which is not stressful, I suppose. But those same people who do that freak out when they see like a drop too. What was the delta on my leaps when I bought it on the I don't remember. uh let's see, does it show my date? I think it was during let's see if I can figure out when this was. I remember God, nothing even looks like a dip anymore. Good lord. Uh but I think, let's see. Was it, I don't know, we might have to go back and look for it. It may have been August 17th, 18th, or 19th, because I remember this big drop. It dropped into the 600s. I wanted to buy it in a different account than my Robinhood, because like Robinhood I can get instant, and I decided to buy it in my TD account. I should have got it in the Tastyworks account, but I was like transferring the money. I think even during this first dip day, but I and then I like had to wait. TD is so slow, like 1 or 2 days for the funds to settle out. So I think it was like on its way back up. I think it may have been then. So you just have to go look at the options history. But I don't know. It was out of the money at the time. I just saw this huge dip and I was like, oh man, taking advantage of that. And it was kind of trading in a little bit of a trend there for a long time. So I could have gotten it for a little bit cheaper, but now who cares? Maybe I could have gotten one a little bit closer to the money, but I just wanted to spend like 15 grand on it. Buy buy Spy Leaps or SPXL Leaps, very good return. Yeah, Velocity does that. I think I don't know. I can't remember. I think you said yesterday how many you got, but I think it's a lot of them, and probably better than sitting on the index. But how many people don't even know what an option is? Like, it's a lot of people. Or leaps. I think that's like the majority of the people. My my uh my girlfriend's brother still like insists it's all gambling, and I think there's a lot of mentality, especially like a little bit older mentality of that. Like, just like it's gambling. His What did he buy? His son bought um not not Spotify. What was the other one? Um, oh my gosh, it was one I just sold. I had leaps on it, and I sold it just to buy more Tesla. Oh my god, I completely forget what the stock was, but maybe it'll come to me after I stop trying to remember it. But he bought yeah, shares of, God, I can't even remember what it was. I don't know, but he bought it like at $10, and his dad was pissed that he bought it, and he sold like at $14, and now I don't know. It's at like 50. So it's the one. I don't know. The stock price I know it's kind of been around, I think 50 or 70, because I had bought a $50 leaps on it, and it went up to 70, and I sold the call against my leaps, turned it into a debit spread, and then I closed it all out. Uh, Not Spotify. Why do I keep wanting to say Spotify? But Snapchat. Thank you, Snapchat. It did come to me. and I think he bought it. Gosh, what was this? Because it was like a no dollar stock, wasn't it? Like, yeah, it was 6 8 bucks. But I remember he bought it for like 10 and sold it for like 14. His dad's just like, man, it's just gambling. Don't do it. Um, Man, it's taken quite a beating. Glad we got out of it. Holy smokes, my leaps would not be worth anything anymore compared to what they were. But even his 12, 10 to 14, but he just got like an earful of it. He's an adult. He's gone to college, but he still lives at his parents' house and listens to him. See, not too much income right now. Just ensure how much to have in an account and when to pool to put all income into the market. It's I guess it's hard. I don't know how much you need for kind of like basic stuff too. Like for me, it's easier, I guess, because like I do have my day job, so I have my normal income, um, so that's fine. $9,000, 9,000, 18,000 portfolio. Hmm. I guess if I was in that situation, I would probably go. I would go heavy into it, except for maybe the cash you need for a month or something like that. Like even if the SPY has a major pullback, it's probably not going to be a lose 20% of your. Um, it's not you're not going to lose 20% of it, and the upside potential is much better. If you wanted something even safer, like it's all your comfort level too. You could stick it into QILD or something like that, and just earn that. It's like 1% payout per month. I think someone called it being a specialist at a handful of stocks versus trying to maintain a portfolio with a bunch. Yeah, I would rather be a specialist. And then, the other thing, by paying really good attention to one stock that's huge, is understanding the pullbacks and being comfortable with it too. You ever use scanners for looking for stocks? I have, but I don't anymore. I'll pay attention to IPOs so I know if there's anything new coming out. I have my bag of them just sitting in my long term, just kind of like some blue chip stuff, which really hasn't moved. I mean, it's moved, but not like actively trading at all. So I'll just use like IPO announcements, what IPOs are coming out, see if there's anything interesting. I've used Option Scanner before, looking um, looking for some like underpriced options, but it's just too much. Like for what I want to do, my my like whole thing, and it's been a bigger circle thing, right? Like you get into this, you learn all you can, you ask questions, you're reading, you learn all these different plays. You learn butterflies and condors and broken wing butterflies, puts, calls, like, and this whole myriad of different things, and then realize I don't need all this. I don't need all this fanciness. Sticking to a couple stocks and a basic strategy. I know I know those stocks better. I know that strategy better. I know how to manage it. It's simple, and I'm not like trying to juggle 15 things. I'm not trying to make it stressful for 6 hours a day worrying about so many different things. I might as well just keep it simple. And the long-term thought is I don't want to wake up in the middle of the night, worry about the stock price, worry about what I'm going to do in these positions, just have it. It's not passive, but let's get it close to as passive as possible, or something that's second nature, depending on like what you do at your job. There's some like, if you're a mechanic and that's like what you've done for 20 years, and you hear a car pull up and making a familiar sound, it's not like you have to put a lot of effort into it. You're just like, yes, that is a lifter. We need to adjust your valves on this old ass V8 to get rid of that sound. And you just know it intuitively. And that's where I want to be with the plays. Like I don't want to have to look at 15 indicators, 15 different stocks, paid attention to it. That's pretty much that's the realization I came to. So that's why everything is pared down to a couple of them. Might as well learn things, and even if you're kind of bouncing around still figuring out what you want to do, try the different strategies. Mine works for me, and there's different people who are comfortable with different things. If you want to specialize in doing zero DTE SPX plays, have at it. That's not for me. I don't want to sit there and monitor it all day. I want to be able to go on a vacation or take a day off and not have to worry about what's going on that day. Been looking into Palantir for the long term, more speculative position. I was debating buying some leaps and maybe doing some poor man's covered call versus wheeling. Yeah, Palantir is super interesting. Watch all their videos. It takes a lot to wrap your mind around it, though. I think long term they'll 20x long term. I'm fairly confident of that. Just by what they're doing. And leaps versus wheeling. Yeah, the only thing that sucks about either of those is the one day when everybody gets it figured out and rockets up. I don't know why. I'm always more scared about stocks going up than going down on the companies that I love. But it's also because I see them through those glasses of where they're going to be in 5 years or 10 years. I'm not worried about next week. And I guess I imagine the impact that's going to happen. Very true. I have plenty of time to let it grow, so cash kind of doesn't make sense. Even 30% of my account was wiped, I'd be fine. It happened before. That's cool. Yeah, as long as you're fine with it and you're in an index, it just shouldn't really matter long term. But cash is just your cash over the last year compared to even being in the S&P. What are we? 1 year. I don't know what that is percentage wise, but let's see. You have $9,000, so that would have grabbed you like 30 shares pretty much. Something like that, 347 to 470. And either that, so 9,000 divided by 347 would have had 25 shares, and now you'd have $12,000 not doing anything but sticking it into the S&P, and your cash would have just devalued. At least with the S&P, you're keeping up with things, and if it goes down, then all you really are is doing is catching that downside, I think. Like if everything drops, then prices drop, and your less cash buys more stuff than it used to. Going in heavy Monday, dude. With this huge spike, that might be a little scary. Going in heavy is great. Dollar cost averaging, you cannot beat dollar cost averaging. If it were me and I was gonna put $9,000 in there, I would put I don't know, 500 a week, 1,000 a week over the next 9 weeks or something like that to be able to. I mean, obviously you have to have money in your checking account. You have to have some, but it doesn't need to go there all at one time. So break it up in a little bit of chunks. Oh, not on SPY. Okay, cool. Debunking cash is king. Oh yeah, dude. Cash is not king. Cash is trash. You can't do anything with it. I mean, you can. You just get stuff. But that's why big money, that's why like bonds jump up, because people want to preserve their their wealth. I mean, we're talking about a few grand, 9 grand, 20 grand, something like that, 50 grand, 100 grand, but people with millions of dollars, or, hundreds of millions of dollars, they don't want to lose that leverage. Like whatever their $2 million used to be able to buy you a house somewhere. Well, I mean, like, so I have places around me where you used to be able to buy a house for 2 million, and now you can't. So they just want to keep up with that value. Um, yeah, it's terrible. But so where they see that the returns of the stock aren't going to be as good, and that's why like when the S&P dropped at the beginning of the whole virus thing, that's why everything shifted over to bonds, because that's a given return, right? At least you're getting 2% or 1% or whatever you're getting off your actual bonds, and it's pretty much guaranteed, rather than a risky stock that might not be returning anything. But over the long term, I mean, S&P, and that's just that calculation isn't with, that wouldn't be including the dividends too. Where's my favorite one? Drip returns, is this it? The dividend channel. I like this thing. Let's see if it gets up on the screen. Symbol. We can always compare them to the SPY. And we'll go a year ago, so that is 2020, November 2020. 10,000 invested. Oh, I guess that doesn't even really make too much difference. Well, a year. But there is a year's return with and without dividends reinvested. 14,000. This is 10 grand into 14,360 or 14,390. So, and let's see what the that's currently 4 years ago. See what the $10,000 looks like. This is kind of a fun one though, and you can compare. They'll compare the S&P into whatever stock you want. So 16. So we can do like Apple. I don't know if you guys ever played with this. Oh, wait, no, we want to. Oops, compare with the S&P. There we go. So this is $10,000 for 5 years. $10,000, 5 years, over doubled. $23,000 or $24,000, depends on whether or not you reinvest the dividends. If you had it all in Apple, you'd have $57,000, like 5 times your money. Not bad. Not bad at all. Yep, free money. Free wealth. Leaps are 3 times more profitable as well. Better than 3 times compared to the equity. And that's buying them at the money, or where at. Just need that realization. Yeah. Awesome. That's so good. Yeah. Money just doesn't go anywhere. And like, if you really think about what, I don't know, what a couple $100 worth of food alone got you 2 years ago compared to now. I mean, even like Costco steak. That's one that I realized. I stopped buying meat like 6 months ago, but I know there was like the Costco steaks. I think like a 3-pack of their ribeyes, I think used to be like 40 or $50, and then I saw they were like $80. So much more expensive. What do you mean? I thought buying Gucci bags and LV bags makes me rich. It does. Totally. Buying Coach bags makes me rich because I own the stock. Mm, yeah. Actually, yeah. Today I was talking one of my friends again. His ex. She, oh my God, shoves all her money into that kind of those bags. I have never, I have never actually met a rich person at all having anything that they flex with, like at all. They'll have a nice car in the garage, nice watch. That's about it. Oh, and a nice house too. But yeah, again, I work in an area where, like, I live. Mm, it's like 20 some minutes to like where Bill Gates lives. That kind of area where there's like that kind of money. They're just insane money. Any time where I think I'm doing well, I can go drive past that area and go, yeah, I'm poor. Well, relatively. Little and Spy, Arc, Neo, Tesla, and Palantir every week. There you go. Averaging, dollar cost averaging. I love that. There's that article, like, not even God can beat dollar cost averaging. But that's where I like it. Like, even on the Robinhood account where I decided I'll stick a little into crypto, I just bought $3 a day. I don't even know what we're up to. That's what I've been doing on Tesla forever. $100 a day. And I paused my Palantir purchasing because it's up right now. Anything above my leaps, my goal is 1,000 shares. So I paused that. But $3 a day of crypto. Oh my gosh. Wait, is this daily? Oh, today's return. I was like, how am I only up 14 cents? Not up much. 40% on Ethereum. Let's see. My equity. Oh, oh yeah, you can't see that. So far we've only purchased a couple $100 of Ethereum and $170 of the other two. But no need to rush, right? It's we have plenty of time. $3 a day, $2 a day, $1 a day. It all adds up. It all just like totally adds up. Let me see if I can find. I've got another. See my M1. I've got a dividend account over there. See what this thing. And I just put. Let's see, not this portfolio. Where's my. I think we stick 40. Oop, $40 or something like that a week into this, and these are just all dividend stocks. Um, but November, so like a year ago, this thing was only worth 8,000, and now it's worth 18,000. So almost exactly a $10,000 gain. So we've put in. Why is it only that much? I don't exactly understand. Oh, because some of it was cash. So I put in 6,000. Dividends have given us an extra $500, and the market gain is $3,500. But that was a pretty small account at one point, and we just slowly averaged in. What's up, Raul Stone? These are none of the stocks that I actually love, but holy crap, what is this one? Oh, oh yeah, QLD on this one. This is one I just put together. Everything in there pays a dividend. They pay them very often. So initially I grabbed one that paid every day of the week, like all year round. And my thought process behind this is when we receive the dividends, any of the stocks that were down, it's going to buy those stocks, which is what you should do, right? Buy a stock when it's down, not purchase the ones that are up. And eventually over time, we're purchasing them at the right time, and we can grow pretty decently. So I guess not too bad overall. For Yeah, $4,000 in a year is not terrible. I guess better than the S&P, right? I think I'll actually have to calculate it. Actually, what's the? Oh, I think you have to say 10,000. Oh well, yeah. Anyways, so that's just like one of my. This was a kind of like a little experiment with dividend stuff. I'm not too excited about the dividend stocks or anything like that, but it doesn't hurt to have this nice little basket of them going. And I have a few other accounts in M1. Just have some of my Tesla in there, some long-term holdings, and IRA. This is M1's pretty good for just long-term holding stuff. You can't do any options in it. And I like the fact that like on most of the brokerages, if you have drip, it's whatever. Like if you get an Apple dividend, it goes back into Apple. Or this one, you build a pie out, and whatever you're low on your little pie, like where you can screw it up, or so like my AT&T, which I wish I didn't have anymore. I don't know. That might be growing, where I have 3% is the allocation that I want, and we're down at 2.9, so it'll stick some more money in there. It'll actually stick in the lowest ones first, and then it'll build those up. But anything I'm above average on, so like Blackstone, we have 3.8% of our money is in Blackstone, and the target's 3%. So it won't buy this at all until either it comes down or the other stocks raise up to hit that. Another one of my theories. And not a bad place of sticking $40. I think it's $40 either once or twice a week. Let's see, guys. It says I put 6,000, 150. Maybe I put in 3 times a week. I don't know. Market gain. Oh, maybe I put more than that in it. Oh well. We put 65. Net cash flow, net gains. Oh yeah, so 240. Yeah, so it looks like $40 twice a week. Anyways, you guys have anything else you want to go over? I think I might get going with the rest of my day. If there's nothing else we need to get over, excited for Monday, get started with the IRA. Excited IRA and the whole big fat $600 account. All right, let's see. See you later, Jacob. See you later, Stone. See you later, Velocity. See you later, Kit Kat, Ray, JC. What's up, my man? Excited for the week. You're very welcome. Thanks for showing up. Thanks for the question. Love you guys. This is perfect size again. And hopefully next week we don't see a major like bomb on Tesla because he's gonna sell some stock. So, all right, guys, love you. Have a great rest of your weekend.